Hi guys, welcome to Business Reviews vlog. Today we're going to review Philam Life Active Health Invest Plus. So this is the first full proposal that I will be reviewing. It has 8 pages. I likely will not purchase it. I have other investment instruments and assets to make more money. I'm also wearing red today. Disclaimer. This is the table of contents of what we'll discuss today. So this was provided to me last year. The person who helped me make this, I'll include his details. And the validity, this is expired. It's a quarter. You can see it here at the bottom. First page, the page is a bit too cramped up. There's a description. Thank you for choosing. A package health insurance plan takes care of your health now and in the future. Active Health Invest Plus is a 10-pay variable life insurance VUL that provides the following: life insurance coverage, comprehensive health and accident coverage, health fund, and Philam Life Vitality membership. Philam Life Vitality membership is one of the key flagship components. I think that's one of the greatest things they have. Parang you get points or money or some rebate kapag you're part of this and you take on particular tasks. Let's go to the 4 parts. First one, life insurance. Should anything happen to the insured, your loved ones will receive a lump sum cash benefit of 3 million, which is the face amount of your policy, or the account value, whichever is greater, subject to minimum guaranteed death benefit. ****. Disclaimer. Comprehensive health and accident coverage. Enjoy additional coverage for accident and health, critical illness, hospital confinement, and waiver of premium riders. Accident, if something happens to you. Critical illness, hospital confinement, and waiver of premium riders. Yeah, so waiver of premium, if pag may nangyari sa'yo, hindi mo na kailangan bayaran yung premium. Yung premium yung binabayaran. Health fund. Build a health fund that accumulates over time depending on the performance of the funds, expertly managed by Philam Asset Management Inc. PAMI. You can purchase mutual funds from a broker. I use Call Financial, and I have a video on how to do that here. Philam Life Vitality membership. With Active Health Invest Plus, the insured also becomes a member of the Philam Vitality program. Okay, what is that? Be rewarded as a Philam Vitality member. As a Philam Vitality member, the insured gets to enjoy rewards for taking active steps to live healthy. It provides discounts from a wide range of partners, including additional 20% on its life insurance and insurance riders at the start of your Active Health Invest Plus plan. I think this is good. If you're encouraging people to be healthy, I like this. And I like that this trend has started and continued because it will save them a lot of money. I think this will be the bigger trigger. Insurance companies will be the one accountable for making people healthier en masse. Enjoy more benefits by being active. Throughout the membership, the insured gets to earn Philam Vitality points that will determine his Philam Vitality status each policy anniversary. The additional coverage can range from 0 to 50% depending on his Philam Vitality status at the end of the year. By living healthy, he can increase his status and enjoy more additional coverage. You get more value. And maybe that's why they had that clause that it's whichever is greater. Discounts from a wide range of partners. Discount, well, it could be good if you use it, like for a gym membership, which is like really expensive. Easy access to information. You can monitor your Philam Vitality points and status by registering membership on. Ito maganda to. I think I like this just because of that fund. It's a differentiating factor for Philam Life to have that. Premiums and benefits. Basic coverage, accidental health, early stage critical illness, half. Daily hospital income benefit. I don't know how many days that is, but 5,000 daily. That's great. Long-term health benefit. LTH, ICU, outpatient treatment benefit. Waiver of premium. That's free. And this costs $229,038.33. Page 2. The top part says the payments. Annual, semi-annual, quarterly, monthly. This is how much you're paying. Premiums, this is how much you're paying for premium. That's how much the premiums are. Vitality membership fee. First set of disclaimers that covers the first page and the second page. Active Health Invest Plus is a variant of the Health Invest Plus with Philam Vitality. Health Invest Plus is a health invest plan with a built-in early stage critical illness, waiver premium, accident and health riders. By availing of the Active Health Invest Plus, you automatically avail the Philam Vitality membership and its rewards, including your additional coverage of life insurance riders. Philam Vitality membership fee should be paid continuously as long as policy is in force. If you choose to discontinue your Philam Vitality membership, you will no longer be availing of the active variant, and only the Health Invest Plus plan will continue. This is something that I don't like. This package and these inclusions, and in case you can choose to discontinue one part of it, the Vitality membership, the one I like, you will no longer be availing of the active variant Health Invest Plus plan will things. You can cut out a part of it. That's what they're saying. Number 2, payment period is not guaranteed. In the future, if the account value becomes insufficient to pay for the applicable charges, it is possible that you may be required to pay additional premiums. So when I pay is not guaranteed. I don't know how this is phrased. There are cases where you need to pay up and you're not sure. If I get an insurance, I don't want to worry about it. That's an unstated expectation. Why did you make it this way? Somebody made this decision and your policy can get terminated. You get insurance for security. If there's a way for people to remove this part for VUL policies, please remove it. This is one of the things that I really hate about VUL. I don't want to worry about other stuff. If I'm investing, I'm investing. I want it to be hyper-focused. If I want protection, I just want protection. This probably will not work for me. The third one, the minimum guaranteed death benefit as prescribed by the Insurance Commission is 500% of the annual basic premium. It is a prescription. Plus 125% of each subsequent top-up premium less 125% of each partial withdrawal. Okay, so withdrawals, we're not going to talk about that because some insurance, they will give you an option to give me a lot of money and they'll give you some part of it back. You can loan it. I don't think that this is good. I don't like it. Total premium for the illustration does not include Vitality membership fee. Page 3. Your Active Health Invest plan allows you to invest your premium payments in funds expertly managed by Philam Asset Management Incorporated, a wholly owned subsidiary of Philam Life. PAMI is a leader in asset management in the Philippines, managing mutual funds from different asset classes, both local and foreign currency. PAMI is the fund management arm of Philam Life and has been managing the investments for its variable life insurance products through active fund management and diversification. I think this is the good part about VUL. People that don't know about mutual funds, they're educating. That's good. So they have 4 funds here. Philam Bond Fund, it's more conservative. PAMI Philam Fund, Balanced Risk Appetite. Strategic Growth Fund, long-term capital growth through investments in equity securities. PAMI Philam Equity Index Fund provides investors who are comfortable with the risk with long-term capital growth through an opportunity to invest in a basket of stocks, compromising PSEI such a proportion that performance of the funds attempts to match that of the PSEI. You may allocate your premium payments up to a maximum of 3 investment funds per policy. The company reserves the right to change the number of maximum investment funds. So you would have the ability to play with funds there within Philam Life. The problem if you buy a mutual fund directly, there usually is a lock-in period. I don't know if that applies here. Page 4. Active Health Invest Plus is a 10-pay variable life insurance plan where living death benefits depend on the performance of the investment fund linked to your policy. The premium payments, net premium charges, are invested in funds that earn you an account value over time. Illustrated benefits assume all premiums, basic, rider, regular, top-up, special, top-up premiums, if any, are paid in full when due for the duration of the policy, no unpaid premium, no withdrawals, and the current scale of charges remain unchanged. Since fund performance may vary, the values of your units are not guaranteed and will depend on the actual investment performance in a given period. So this is what you're paying for, which is assured, the total annual premium. The account value that they're providing here is 4%, 6%, and 10% are projected benefits. I think this is like they're trying to signify that the conservative will grow by 4%, the aggressive would be 10%, and the moderate would be 6%. I don't believe this. If somebody in the Philippines will give me like 10%, probably I'll take that, if they can assure that. I'd rather they give a more conservative number, because you can check the history of the fund since inception. Here's typically where you look at where you want to buy a mutual fund and how much they're performing over time. This includes since how long they started. Plus, you have to pay them the fees. The annual rates of return shown above are for illustration purposes only. They are not based on past performance and are not forecasts, and not a guarantee of future fund performance. Actual returns may differ. Higher allocation to riskier assets can result in greater volatility in the projected benefits. It's true, because that's how funds work. The total annual premium does not include Vitality membership fee. The fund growth assumptions of 4%, 6%, and 10% are net of the fund management charge. Okay, so here we go. The 6% fund growth assumption is projected long-term annual rate based on the company's expected fund mix. There's a fund management charge. The cost of this might not be projected in this table too. The projected total account value illustrated above are inclusive of loyalty bonus and net of applicable policy charges, except surrender charges, while the full withdrawal value is illustrated are the projected total account value net of surrender charges. Total account value, full withdrawal value, and death benefit. The death benefit will increase only 20 years after. For complete details, please refer to notes on illustration of benefits page. So they have a different page for that. Page 5, notes on illustration of benefits. All payments and benefits shown are in Philippine pesos. Payments are acceptable in Philippine pesos only. The illustration summary relates to your Active Health Invest Plus plan. The projected returns are based on assumed actual rates of 4%, 6% as approved by the Insurance Commission. These are hypothetical figures and are meant to represent or indicative of actual fund returns. Your withdrawal value at a given period could be less than the amount you actually invested. Investment risks associated with this product are to be borne solely by you as the policy owner. Why do I need to go to a middleman if I'm still taking the same risk and pay more? I don't understand. The death benefit is the highest of the face amount, account value, or minimum death benefit. The minimum guaranteed death benefit is equal to 500% of the annual basic premium plus 125% of each subsequent top-up premium, if any, less 125. Okay, so this is the same thing that they were saying that the Insurance Commission was prescribing. One-time loyalty bonus equivalent to 100% of the annual basic premium will be given at the end of the 20th policy year, provided that premiums are continuously paid on schedule or within the grace period and no withdrawals are made. So they will give you a loyalty bonus. We'll give you one of the years you paid back 20 years after, which would be you've lost that value. Let's say you paid them 200,000. In 20 years, that would be half, assuming 3% inflation. Policy charges. Your basic and rider premiums and subject to premium charges, 90%, 40%, and 10% respectively during your first 3 policy years. All top-up premiums will be subject to 4% premium charge. These charges are applied to cover for the administrative expenses incurred for the policy and will be deducted prior to the purchase of units in your chosen funds. So there's an entry price, that's what they're saying. You have to pay for something first. That's the problem. I mean, just buy a mutual fund directly. That's what I've been saying. The insurance charge is the cost of providing the insurance coverage and rider coverage, if any, associated with the plan. This will depend on the attained age, gender, risk classification of the insured, and is deducted monthly from the account value. So this is what they mean. So when you open a Vol account, the amount will be deducted from the performance, and that's why when the performance is bad, you need to put in more money. The administrative charge of the cost of maintaining the policy is equivalent to 200 per month and is deducted monthly from the account value. During the premium paying years, the monthly administrative charge will be reduced to 100 every time you pay the premium as scheduled or within the grace period. I don't like 7C just because I'm giving you money and I need to have to pay an entrance to maintain it, and I might need it to put in more money. It's so exhausting. I'm getting tired for my money. In case premiums are not paid within the grace period of 31 days from the due date, a premium holiday charge as percentage of the basic and rider premiums of the respectively during the first 3 policy years shall be imposed. In case premiums are not paid within the grace period is 31 days, so let's say your due date is January 1st and you weren't able to pay until January 31. If the account value becomes insufficient to pay for applicable policy charges, the plan will automatically terminate. The plan will automatically terminate. What? The plan will automatically terminate. The plan? What? This is wrong. And all benefits will end except if the policy satisfies the conditions under Note 9. To ensure that you will enjoy continuous coverage, we will not terminate your policy within the first 2 years of your plan, even if the account value becomes insufficient to pay for all applicable policy charges due to performance of underlying investment funds, provided that all basic premiums, rider premiums, special top-up premiums, as shown to the total premium breakdown provided in page 1 of the sales illustration are paid when they fall due and there are no withdrawals. We will accrue all outstanding policy charges at no interest, which will be made payable by canceling the appropriate units once units are credited to your policy, or will be deducted from a benefit once a benefit becomes payable on your policy. So number 9 says, in the first 2 years, if the performance dips, we'll still keep your policy for the first 2 years. So they have an interest method if you're not able to pay or if the fund is not enough. So that complicates, this complicates rules for me. Is there a simpler way? Please, let's do that. The minimum amount that can be switched is 1,000 per fund, and the maintaining balance after fund switching is 1,000 per fund. Fund switching shall be free of charge. What am I feeling at this point? Page 5 makes me feel like this is about money and not health insurance. I want to see what's covered first. This is like you're making the investment part of it a lot more important, but they can do that directly. And any FA that tells you you can is lying. You can do that directly. And it's probably a lot cheaper to do it that way too. And you're trying to mix 2 asset classes. Don't do that. If your intention is clear, your goals are clear, you just need a clear plan and a clear product, not like something to be like in between, wishy-washy on you. You're putting your money there. Withdrawal subject to charges, subject to surrender charges of 75, 75, 15, 25, and 15 respectively the first 5 years. So let's say you pay them 200,000. In the first year you surrender, you'll get 1/4 of that. Second year, 1/4. 50, not exactly to the amount that you paid. It's probably gonna have more reductions. And 10% from the 6th to 10th year of the amount withdrawn. Withdrawals are made against the units created by top-up premiums will not be subject to surrender charges. The minimum amount per withdrawal is 1,000 per fund, while the maintaining balance after withdrawal is 1,000 per fund. The fund management charge covers the investment expenses and allow liabilities by managing assets from the investment fund. This is deducted from net asset value of the investment fund as shown below. This company, the company, whoa, very formal, the company, reserves the right to change any of the minimums amount set in the sales illustration. All of the above charges may change subject to prior approval of the insurance commission. This is to make it personal, please. If you decide that this plan is not suitable for your needs, simply return the policy within 15 days. So this is like a refund, total account value plus charges that have been deducted. Oh, damn. They already are deducting you there. This illustration is valid if distributed within the Philippines. Number 15 is like a woozy. They say they have deductions already. I don't know if that's inherent to Volt products in general from all companies. I don't like that. A reminder on pre-existing conditions and free look period. Upon receiving the policy contract, you may refer to the document for full details of the critical illness definitions, inclusions, including pre-existing conditions, other limitations. If you decide that this plan is necessary for you, okay, return the policy or your authorized representative will refund you to total account value plus charges that have been deducted. Plus charges minus charges. That's confusing. Does that mean that the values are the Vitality Fund? Can I keep that? Because I just want the Vitality. Like when I heard about that, that's great. But I know Sun is also doing something like that. I'm not sure of the others because they weren't mentioned. Page 6. 10 years? What? You could have built a business in 10 years. With that money? I really don't like that return. Additional coverage. I'm not going to go through these numbers. The note here says, the annual rates of return shown above are for illustrations, which means this is useless. I don't like reading stuff like that. Notes on illustration. Notes found in the Notes of Illustration Benefits page will also apply to this illustration of Philam Vitality additional coverage. While above illustration only shows the application of Philam Vitality additional coverage on the life insurance coverage, the Philam Vitality additional coverage will apply to both life insurance coverage and the coverage for all riders. Philam Vitality additional coverage. Okay, so this is like bronze, silver, gold, and platinum. You know, that works for me sometimes. I pay for something and then I'm forced to do it just because I'm paying. The additional coverage percentage on the life insurance and riders on any policy year can be as high as 50% and it cannot be lower than 0. The yearly vitality status shown above is for illustration only. Vitality status will depend on your actual vitality points earned. So how much effort do I need to put in? I need to put in more money. I need to put in more effort. Can my money just make money for me if this is an investment scheme? And that's why I don't like Volt in general. I have nothing against BPI. Page 7. Declarations, acknowledge of variability. It's like a standard, I think. You can read it if you want. The illustration and the proposal will win. Page 8 is where we have the coverage. So Vol is focused on investment and not your life. And the way they fashioned it here, life comes at the end. Let's talk money first, your life next. Actually, it's on the very last page. The way they phrase is like, Maybe just because it conflicts with my goals. The list of critical conditions and procedures covered by your early stage critical illness rider includes 56 major illnesses and procedures and 11 early stage conditions listed below. For the waiver of premium critical illness rider, covered critical conditions and 56 major conditions listed below. Their coverage is a lot wider. There are more coverage items than Manulife. 56. It's less complicated than Sun's. These are very particular ones. Okay, I want to check until what year am I covered here? Until 65! That's pretty low. Additional 10% of the early stage critical illness coverage will be paid out if insured undergoes an angioplasty procedure and 20% if the insured diagnosed with diabetic complication. Please refer to the policy contract for full details on the contract illness definitions, inclusions, and limitations. Let's summarize what I think of the Philam Life Health Invest Plus. This is my first full review. Coming into this, I want you to be aware that I was already predisposed negatively towards wool just because of the investment factor. This might work for you. This is good for you if you need someone to help you with that. 20 years is a lot of time. You can learn to invest directly within that time. If you want to grow your money, you have to learn how to do it directly without a middleman. Will I buy it? No. Can I recommend it? Up to 60 and that amount. Coverage until 65. The coverage is pretty good. Waiver is free, including all those riders. It got me mixed. Complications I don't like about Vol. The presentation format also impacted me. The spacing, I don't like it. The font is too small. The margins are really thin. It's trying to tell a lot. There were a lot of disclaimers, but they were in the same page. That's good. Putting the health part at the end is something I don't like just because of my goals. My needs comes first before we talk about investment. Having to worry about stuff is something I don't really like. I've given my opinion on it based on my needs. I like BPI's system. I like how do you do it. The branding is complete. The red and white thing is good. You guys, let me know. What do you think? I hope you find this useful. Oh, yeah. Can you subscribe? Please consider liking the video, sharing it. Here's the policy skim at the end of the video. Thank you for watching. Have a great day. Bye.